One of the secrets to becoming consistently profitable Forex trader is incorporating Forex fundamental analysis into your trading routine will help you select smarter trades, avoid unnecessary losses, and help you become a better trader. Hello everyone, I'm Kathy Lee with BK Traders, and I've been trading Forex for more than 20 years. From day one of my Forex trading career at JPMorgan Chase, fundamentals were always an important part of my trading decisions. In this video, I'm going to share with you my own quick 10-minute Forex fundamental analysis day trading routine. I personally follow this routine every single day to select the highest quality trades, which are the trades with the best chance of winning. Many of you spend all of your time looking at charts, using technical analysis as your primary tool for selecting trades. However, I believe that fundamentals will tell you what to trade, and technicals will tell you when to trade it. I always use a combination of both, and hopefully you'll learn to as well. If you can't wrap your head around fundamentals, you find it a little daunting, I hope you'll be able to get a much better understanding about it after watching this video. There's nothing worse than being caught off guard by a piece of data or news that everyone else was anticipating or prepared for. So make sure you follow this fundamental trading routine. It only takes 10 minutes to get all of the big stories and understand the context for price movements. If you want to take more time and do a deep dive in some of the topics and current events, great. But it's not necessary to get what you need for your trading day. The first and last things that you should do every day is to check the economic calendar, because you need to know what could help and hurt your trades. Your next step is to scan the headlines for any market-moving news like comments from central bank officials or geopolitical events, for example. Start with the major financial news sites like CNBC, Reuters, Wall Street Journal, Bloomberg, then go to your X, formerly Twitter, feeds. My favorites are Forex Live, Financial Juice, News Squawk, Zero Hedge, Investing.com. I actually recommend starting with Forex Live because it's focused on the Forex market. And using a feed aggregator like TweetDeck really helps for quick scanning, but I have to admit, it's a paid service now thanks to Elon Musk. If there's something important to know about that could affect your trades, it will be on one of these 5 feeds. You'll be covered. If you want a deeper analysis, I personally love reading Mark Chandler's site, marktomarket.com. Don't worry, I've included all of these links in the description below. The next essential step to trading smarter is to get a gauge of market sentiment. Here's what to look for, but first, if you're learning from this content, please let me know by hitting the like button on this video and subscribing to my channel. The best trades are the ones that are aligned with market sentiment. The first thing to look at are stock futures. Are they up or are they down? If stock futures are down significantly, the smart thing to do is to look to sell risk currencies like the yen crosses, sterling, Aussie, Kiwi. If stock futures, on the other hand, are up, look for opportunities to buy higher risk pairs like Aussie yen, Kiwi yen, and the euro dollar. Then, check US Treasury yields. If they are up significantly, the market is telling you that sentiment is in favor of US dollar gains. So it's much smarter to look for opportunities to buy the dollar and pass on trade setups that are telling you to sell it. On the flip side, if Treasury yields are down significantly, you'll want to look for opportunities to sell the US dollar and avoid those trades that are telling you to buy it. Because at that point, if you're buying it, you'll be fighting against the market trend and the market forces. Then, check to see what oil prices are doing. If oil prices are up, that supports long Canadian dollar trades. If oil prices are down, that supports selling the Canadian dollar. I also like to look at the strongest and weakest performers at the New York and Tokyo Open to get a gauge of relative value cross-trade opportunities, which oftentimes I feel are the best, most lucrative trading opportunities. Only after this process will I check my charts for my strategy, for trade setups, and I'll take the ones that are consistent with fundamentals and market sentiment. My best trades are the ones where we just had weak Australian data, for example. Stock futures are down sharply, which is risk off, all of which supports selling the Australian dollar. And if US yields are up, which is good for the US dollar, and my trading strategy ZIP is telling me to sell Aussie dollar at this chart here, that's when I have the best trades. After completing all of these steps, which should only take about 10 to 15 minutes of your time, you'll have a deeper understanding of the context driving the day's price movement, such as the catalyst behind certain currencies outperforming others, and understanding why the market may be overlooking significant data in favor of a broader narrative. Armed with this information, you'll be better able to decide whether to take a trade or pass on it. If there's a big event on the calendar coming up, you may want to wait for it to happen before actually taking a position. Here's what to look for. So there are a number of different economic calendars that you can actually use. My personal favorite is dailyfx.com, but we'll take a look at a few of them so that you can understand the differences and find the one that works for you. But what I love about the dailyfx.com calendar is that it's very comprehensive. And the most important things that you need to know as a trader every single day, like I said, the beginning of your day and the end of your day, you should be looking at the economic calendar. At the start of the day, you should be looking at what was the economic data that came out overnight and what is expected in the session that I am trading. So for example, if I'm looking at today, this is obviously taken after the data has been released, but if I was starting the New York session, I would have seen, first and foremost, we had Eurozone PMIs. They were pretty much in line with expectations, no surprises. We also had Eurozone inflation data, and this is blue, which is stronger. And we had the Bank of England rate decision. In this case, they left interest rates unchanged with more voting for a hike than a cut. Then I also looked at what happened overnight. And overnight, if I scan down here, I will see that we had stronger data from China, but Australian data, the building permits data, was weaker. Then what I will do is I will look at what is expected today. And the only data that matters, if you want to sort by importance, is the high to medium. You should really only care about the medium, the high, but the medium can also impact your trading for the day. And I knew that for the US, the ISM manufacturing report was going to be very important. And the ISM manufacturing report was going to have an impact on how my trades was going to move, because US data of all the economic reports is the most important data. US data impacts all of the major currencies and impacts euro dollar, dollar yen. So that's why this is a high release, a high impact release. Jobless claims is medium, but it's still very important these days. So what I want you to do every single day is I want you to look at what was the data that was really released overnight. If it was weak, you're probably going to see the currency pair lean lower. So for example, the Australian building permits data was weaker, and during the week we had weaker Australian inflation data and retail sales data. So all of that is going to keep Aussie under pressure. And then you look at what's expected. I know that the US dollar has data. So pretty much I'm in the all clear to trade the US dollar up until 8:30 in the New York time. Then I have to be more sensitive to the US dollar because I have to be more sensitive to whether the data is going to help me or hurt me. So if I think that the jobless claims data and the ISM data is going to be weaker, then okay, maybe I do want to sell dollars, not against Aussie because they had weaker data too, but maybe against the Japanese yen or against the Swiss franc, or maybe even against the euro because euro data was better. That's the way I would start looking at the data. Or I may say to myself, on this given day, we know that we have US non-farm payrolls. So I am not going to trade any US dollar pairs because non-farm payrolls is highly unpredictable. And also it can have a very big impact on the markets. So by looking at the economic calendar, it can help you determine when to trade and when not to trade, because cash and no positions is still a position. The decision to basically protect your money, protect your profits, and stay out of the market until we see, in this case, what I would do is I would wait for the non-farm payrolls report to be released and then trade what I call reactively after the economic report is released. So dailyfx.com is a calendar that you can use. Another calendar that you can potentially use is Forex Factory. Forex Factory has a shallower economic calendar, meaning that there's less economic data that is posted, and they only post the most important releases. So Forex Factory is also a really good economic calendar to use. And what I really love about these economic calendars is that you can click on this and you get more detail, a trends of how the data has been moving. So it gives you a sense of whether the economy has been consistently doing better or consistently doing worse. So all of that can be very valuable to your trading. But that's what I like to do with the economic calendar. I like to, at the start of the day, you want to look at what happened overnight. what happened in the morning and try to identify your strong versus weak trades based upon that. And then what is happening in the session that I'm trading that could affect my trade? So for example, if I'm trading the London session and I know that Eurozone CPI is going to be released, maybe I want to hold off trading euros and focus on the Aussie positions or the Kiwi positions or the dollar yen position. But if I'm trading on a day when non-farm payrolls could be released, for example, then maybe I want to stay out of all dollar positions completely and look at cross trades. Although for non-farm payrolls, you should probably be out for everything. So that's basically what you should look at the beginning of the day. And then at your end of the day, as you're planning your day, trading day, what you should be thinking about is what data is coming out tomorrow. And should I be holding a position overnight ahead of that? So in this case, we know that Australian, the very bottom of the Forex Factory calendar, which would be on every calendar that you see, is the Australian inflation data. So that's important. The PPI is less important than the CPI, but let's imagine it was the CPI release. If I knew that Australian inflation data was going to be released, either I'm taking the trade because I have a view, like I think inflation is going to be lower, and I'm looking to sell the Australian dollar, or I really don't know. But what I do know is that the Australian data is important, and therefore I should not be in an Australian dollar trade before the news. Maybe I want to trade reactively, and that's okay. So that's what you want to do. You want to look at what's on the calendar coming up. Like, for example, if I want to hold on to a trade overnight, and it's a US dollar trade, like dollar yen or euro dollar, then looking at tomorrow's calendar, I see non-farm payrolls is scheduled for release. What this tells me is, Kathy, you should be out of your US dollar trades before 8:30 New York time, because this number could very much sabotage your trades. And it can go both ways. It could be better, it could be worse. And there's so many components like unemployment rate, average hourly earnings, the headline number, that there's so much uncertainty surrounding this release that it's probably best, if I'm holding a position overnight, to be out of that trade by 8:15 a.m. New York time. So that's how you can use the calendar. That's how you should be looking at the calendar as part of your trading routine to help plan the trades you should be taking, to plan the trades that you should not be taking, and plan when you should be in and out of trades. Also, big stories can introduce more volatility in the markets, so you may want to adjust your risk management properly. Information is power in the world of trading. Staying on top of the curve and staying ahead of the curve by being well informed about the big stories gives traders a competitive edge, and all of us could use an edge in trading. If you like this video, let me know in the comments below. Don't forget to subscribe to our channel and hit the alert button to be notified of new posts. Also, if you want to trade with me every day and learn how to use fundamentals to trade, check out the links in the description of this video.